Hey guys, welcome back to Roxum TV and also welcome back to Jam Crypto, whichever platform you're watching on. I hope you guys are having a fantastic day wherever you are. As for Bitcoin, we are experiencing another volatile day because literally just 4 hours before we hopped on this live stream, Bitcoin dipped below to 108K. I mean, yeah, that's so much FUD in the market. What happened during basically, because we are doing this live stream every single day, so what happened in the past 24 hours is that we have the FOMC meeting. So we got the 25 basis point cut, but as we keep stressing on Roxum TV, like the FOMC meeting yesterday was so important because we really need to pay attention to what Jerome Powell tone is. And yesterday, he was basically giving out so much confusion signs to the market. Like, okay, we got 25 basis point cut, just like what we expected months ago. I mean, a few weeks ago, not months ago, but like weeks ago, we expected a 25 basis point cut already. So we end up getting that. Mostly it's just like neutral, but what happened a few hours ago was a little bit scary. So what exactly did he say in the FOMC meeting? Well, basically he was saying that first, okay, we have another FOMC meeting in December, but he's hinting that there's probably not going to be like rate cut. Like he doesn't guarantee we're going to get a rate cut in December. Of course, the market is not going to like it. Hence, it's tanking today. However, he also gave up bullish signs. Like he was saying that QT gonna come to an end on basically 1st of December. So literally just like another month to come. So we're gonna see QT come to an end. So that should be bullish, right? But however, since he was giving out all this like bullishness and then bearishness at the same time, the market was so confused, and hence we are seeing this market crash on Bitcoin. Of course, like we are doing analysis, we're gonna do the TA first, and then we're gonna hop onto the on-chain, and then we're also gonna do the news analysis on the whole macro, and maybe I'm gonna share some news about Hong Kong as well, because Hong Kong is doing amazing things in terms of crypto adoption. And 3 days ago, we have the Solana Spot ETF being approved. So without further ado, if this sounds good to you, make sure you smash up the like button, and also let's dive into the Bitcoin chart right now. So as for Bitcoin, let's start with the hourly chart, and then we're going to slowly build from the shorter time frame to the higher time frame. As for the hourly, we drew this range, so 114K to 115K, like close to 116, but like around this range. This is a really critical support and resistance range. So what we mean is that we need to get inside this range and actually sustain, maybe consolidate and chop around this range instead. So however, back in, when was this? 27. So back in Monday, we try to get inside this range, and then we stay in this, consolidate a little bit, and then we got rejected on Wednesday again. And today, like the FOMC meeting, the market completely crashed. Well, we are at another critical support line, because we have building up this rising support all the way since Friday, so 17th of October. We were building up the support from 103k. We touched that again on 23rd of October, and then yet now we're touching it again. It does show some bearishness. However, if we zoom closer, like one thing at least that is not like completely bearish is that, okay, for the hourly chart, we touch the support line once here and touch again, and then literally 3 or 4 hours before the live stream, we dip below and actually close below the support line, which is not great, but like at least the next hour we managed to close above the support line. So it's not completely bearish, but I would say is neutral to bearish. I really want to see Bitcoin hold above this rising support line. Like if we trade around this like support line more hourly candles, then likely we're going to lose the support, because the more we stay around that level, the weaker the support going to get. So let's see for the coming hours if we manage to really hold the support line from 103k. Let's also hop onto the VLVP, so maybe suggest more data. So for the VLVP is suggesting 110k. So that means, what this means is that a lot of volume is coming in at 110k. So there's like a lot of support trying to defend this line. So buyers are stepping in at 110k, and that's also a psychology number, like it's a round number, right? 110. So let's see if we manage to hold 110k. But like looks like right now we are neutral towards, like lean a little bit towards bearish. It's not like completely bearish. This is at least what I saw on the shorter time frame. Okay, let's also go ahead and hop onto the daily chart as well. So as for the daily chart, we're zooming out and look at the bigger picture. So you would really see between, okay, maybe I'll remove this and then also draw a new triangle. So you will really see the picture that between 107k to 116k, this is really just like noise. Like we are just essentially chopping around. So I wouldn't say it's like too bearish. So if you guys are decent enough, you could just like pull longs at 107k and pull short at 116k. But looks like we are just consolidating inside this range. So not much is happening. Although, like, the more time we spend in here, I would say I'll lean more towards to the bearish side compared to the bullish side a little bit. The reason why, like, okay, nothing in this range is actually that significant, not really significant input to the macro scene. We really need to look at the policies to the macro and geopolitics, because that's what drives demand. So again, like price action wise, if you guys want to trade, this is one tactics. Of course, not financial advice. It's just what I'm seeing from the daily candles. Okay, let's also hop on to the weekly candle, because okay, weekly candle, again, what it suggests is we are having this bearish divergence, and we have been forming this ever since March of 2024. So you could argue this is another evidence that the 4-year cycle is very much still intact. All right, so price is going higher. We're consistently trying to touch and maybe break the resistance of this like rising trend, whereas RSI is going down. So for me to be completely, okay, 4-year cycle is no longer in our life, is no longer relevant. Like I need to see RSI actually break above this resistance and stay above that and sustain that level. Because right now I'm not seeing that in our weekly chart. And as I always mention, if we hop onto the 4-year cycle, we know that okay, the reason why there's spot in the market is that if we count from the cycle bottom to cycle top, it's essentially 1,064 days like worth length of the bull market for it to last. So that's why some people think, okay, maybe 6th of October is already the cycle top. But yeah, we only know this in hindsight. Again, like there are three groups of people. The first group is that we have already seen the cycle top, which is 126K. The second group is that, okay, maybe November and December is actually the cycle top. And the third group is that this cycle is so different because Bitcoin is becoming such a macro asset and it's only driven by macro tailwinds, only driven by geopolitics. So not much about so much about just crypto alone. So those are the arguments. But as I keep on mentioning, we only know in hindsight that whether the bear market has officially started. One metric that I love using is the 50-week moving average. So there are a lot of lines, but I just want you to focus on the blue line that my mouse is showing here. So whenever we have a weekly candle actually close below the 50-week moving average, then we are sure that we have officially entered the bear market. So here is one candle that we have seen, and then here there's another one crossing the 50-week moving average, and here's the other one. So one thing I'm eyeing very closely is that, okay, if we're gonna dip below the 50-week and actually close below the 50-week, but if we actually zoom closer, we're technically still above the 50-week moving average. So the 50-week right now is almost 103, so let's call it 103. And we touched that before in April, so a few months ago. This year, though, it's just like a wicking down. So if we didn't close below the 50-week, it would end up being just a correction and being a really massive buying opportunity. Because if you guys actually bought here and to where we are right now, that's like a 50%. But again, it really depends on whether the weekly candle closing below or just touching. Touching is not too concerning, but if we have two weekly candles close below the 50-week, then it's officially done. So this is one metric that has never failed us, and I'm really sticking to this metric so far because we have this indication that we're gonna know in slightly advance that we are officially entering the bear market. So this is one metrics we're gonna look at. Of course, we're gonna use on-chain to build up the case here to see whether Bitcoin is undervalued or overvalued. Basically, what could be done right now. So that's for the TA. And as for macro-wise or TradFi traditional asset-wise, it's actually not that bad. Though the S&P, it was correcting a little bit during Powell's, maybe not. Okay, let's hop on to the daily. So because I was looking at the weekly. All right. So S&P yesterday, it was correcting a little bit. I mean, it shouldn't come across as a surprise, right? Because what Jerome Powell said yesterday was so unexpectedly hawkish. So that's what happened for the S&P 500. But it's not all doom and gloom, because one good news that we have is that Nvidia right now is officially entering the $5 trillion market cap. Just enter the market cap club of $5 trillion. And this is the first company in history that is worth $5 trillion for Nvidia. So congratulations if any of you guys are holding Nvidia share. So some call it a AI bubble. I would say Nvidia is definitely very expensive. So I prefer Tesla. I still see a lot of potential and room for Tesla to grow, especially at this current price when Nvidia is getting all the attention. So if you ask my personal opinion, of course, like this is opinion, not advice. I would say like Nvidia, I mean Tesla makes a little bit more sense for me, and I've been holding Tesla for quite like a few years. So yeah, as for Bitcoin, of course, like we're retracing a little bit. We passed silver market cap at one point, but of course, Bitcoin dipped so much, and silver actually very close to its all-time high. So that's why we are right now even below Amazon. But I think with all the macro tailwind, we're gonna get them. All right, let's also hop onto the on-chain analysis because we were looking at the 50-week just now. Okay, we're gonna now look at the 200-week. With this chart, it's a little bit more colorful, so it's easier to understand what's going on. So we are looking at the 200-week moving average heat map. So that helps us to see Bitcoin's long-term growth in a more easy way. It shows the price chart with colors that change based on how fast the 200-week moving average is rising. So it separates into different colors. So here we have a warm tone, of course, because it's red and orange. So this means the market is heating up. This usually happens near cycle tops when prices move too fast, because that's exactly what we've seen in late 2021, like mid or late 2021. And then cool colors is, of course, like blue colors. So this means the market is calm and slow. This often happens during bear markets or early bull market stages when prices are low and smart money is buying. In short, this heat map tells us if Bitcoin is in a too hot environment or too cold environment or just about right. And if we look at what's happening right now, right at this instance, the heat map is showing cooler color. So we're seeing like the blue color, which means the 200-week moving average is still growing very slowly. In past cycles, this kind of signals has often come before big price moves, not after them. That gives us two ways to look at it. Like the big bull run hasn't actually happened yet. Bitcoin may still have a major move ahead once the heat map starts flashing warmer tones. Or this cycle is so different and it's so calm compared to the last one, meaning slower growth and less hype overall. Either way, this chart reminds us that Bitcoin is still in the early to mid phase of its long-term cycle, and history shows the cool color, so the blue color, means there's still opportunity ahead of us. Let's move on to the second indicator that I'm showing. So it's the topping cloud price models. This is a chart that helps us to see when Bitcoin might be getting too hot or too high in price. It mixes several key metrics, so the MV and like short-term and long-term MV. We also have the defaulted price in, wait, is this Tiffany blue, like this like green or blue color, and true mean price as well. So this altogether gonna form a like a almost like a cloud, right? Kind of looks like a cloud, I think. So this cloud, it shows the fair value in overheated zone. When Bitcoin like moves above the top of the cloud, so we here like we circle in the yellow color, it means the market is likely overheated and investors are taking profits and the hype is really high. When the price is inside or below the cloud, it means Bitcoin is still in a healthy range or undervalued area. In simple words, like this tool help us to see when Bitcoin might be near a top or is still in a safe zone to get in. What's happening right now, right at this instance, is that Bitcoin has already hit the MV plus 1 standard deviation line, which is shown in the purple here. So purple line, that's the bottom line we're looking at. So we have hit that before. When was this? So late 2024, and then we hit that again in like somewhere around March, just enter April back in 2024. So that's when we hit that that purple line, and then each time we got rejected. So that line right now is sitting at somewhere around 138,000, which now acts as a key resistance level. And then the green line, so this like Tiffany blue color, is the green line here. Right now sitting at 151,000 and has marked the top of previous local peaks in this cycle. So what does this mean? Like if Bitcoin can break above $138,000, it could move up to the tested the green line or the Tiffany blue line again. But if it fails, it may keep trading below the cloud, a sign that the market isn't overheated yet and there's still room to grow before reaching extreme levels. So that's what I see, and then it's kind of aligned with the TA that we've been doing. I cover that extensively again on Roxham TV and yesterday's show, that I'll be really surprised actually Bitcoin don't go to at least 137,000 to 138,000 this year in 2025. Let's also look at the price cycle top indicator, because this is one of the most popular indicators out there. It used the two simple moving averages, so the 111 days moving average, so it's the faster line. We have the blue line here, and then we also have the 350 day moving average, that is the slower line. When the fast line crosses the slower line, so that's what happened back in 2021, and then that's what happened back in late 2017 as well. So this signals that it happened within a few days of Bitcoin's all-time highs. It's a simple but very powerful way to see when the market might be overheated. However, it doesn't work for market bottoms, only for the top. So every indicator is not perfect. It has worked well in past cycles, but there's no guarantee it will be right again this time. At the moment, the two lines of this indicator is still very far apart, meaning the price cycle top signal hasn't triggered yet. If history repeats, that suggests Bitcoin's big move is still ahead, not behind us. So far the market doesn't look very overheated. It's more like a building phase, so building up the momentum before the real top. In the I would say in the short term, do expect volatility, because what happened yesterday? Okay, we have another huge liquidation. So $300 million being liquidated when liquidated from the past crypto market in that past 15 minutes as Jerome Powell delivers FOMC meeting speech. So of course, liquidations and sudden moves like this still happen, but if we zoom out and look at the bigger picture, these events mostly just noise compared to the long-term trend that we actually tracking with real indicators. All right, so that's a lot of data for you guys. Before we hop on to the news section, because we're going to dive deeper into a whole FOMC meeting. What exactly did Jerome Powell signal? What we could prepare? And also Donald Trump is meeting Xi Jinping. I mean, they have met already in South Korea. So literally just happened this morning in Hong Kong time. So we're going to provide some details, what's in it, what did they discuss, and inside the deal as a Bitcoin investor, what we should be aware for the coming days in the Bitcoin market. So if this sounds good to you, stick around after, and we'll see you after the break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Alright guys, welcome back after the break. As I promised you guys, we're gonna look into the news and basically the macro, what exactly happened during the FOMC meeting to trigger a $300 million in liquidations, and it happened within 15 minutes during Jerome Powell's speech. So what's going on? So here's the news. So yesterday we got the 25 basis point cut, which is actually just the second cut this year. They also announced QT will come to an end on 1st of December, meaning they will stop shrinking the balance sheet. So if we also hop onto the balance sheet of the Fed, they're right now sitting at $6.5 trillion. So they're going to stop dumping. So we're seeing this like downward movement. We top at, let me zoom out a little bit. So they top at $9 trillion, and right now they're trying to, stop this like downward movement. Maybe instead of like going up, we're going to have like, we go down and then we're going to consolidate a little bit. That's what it means when it comes to QT, because we haven't got a confirmation that QE is going to start, but at least like QT is coming to an end. So that should be good news, right? Because is at least some liquidity boost for the markets and long-term bullish for Bitcoin. But however, Jerome Powell message is that inflation is still quite sticky. Like job markets are cooling and the economy is solid but it's slowing down. He said the Fed, we're gonna take it basically meeting by meeting. So there's no promise for another cut in December. And of course, that's going to upset the market quite tremendously. The current rate right now is between 4 to 4.25% for the federal fund rate. And if we also look at the probabilities, because remember, just like a few days ago, or maybe yesterday, for the December FOMC meeting, we expect, so there like 90% of people expect we're going to get a 25 basis point cut. But after the FOMC meeting, like Jerome Powell is like creating so much FUD in the market, so much confusion. And then this number went down. So from 90% to right now 70%. So 70% of people expect that we're going to get a 25 basis point cut in December. And then let's see the one for next year. But of course, after May 2026, someone new going to replace Jerome Powell. And we know whoever replaced Jerome Powell, he's going to cut rate aggressively because he's going to be a puppet of Donald Trump. So what happened yesterday, it was like Jerome Powell was so unexpectedly hawkish. Like, of course, the cut of 25 basis point was expected, and we have been expecting that for weeks. But Jerome Powell's tone yesterday was so tough, like so much more tougher than most traders expected. Ending QT is positive, of course, but he was warning about, no further cuts. And actually, it doesn't really make sense in terms of like a macro mindset. So if you ask me, it sounds more like he is trying to create all this FUD on purpose, like trying to confuse people, like confuse the market. Because being in his position, like being the Fed chair, the last thing he wants is that everyone will know what he do, like predict his moves. Like this is kind of like dangerous for the market. So as a Fed chair, like he doesn't want people to know exactly what will happen, like what is his next move. So that's why he's creating all this FUD. Like the reason why I would say ending QT in December, and also no rate cuts in December. It doesn't make sense because, okay, if we hop on to the debt of the US, so of course, like we have the federal fund rates is sort of like a neutral rate for everything related when it comes to loan or debt, like all the way to mortgages for basically local citizens, or even when it comes to bond interest, because US government have to pay out the interest for the US bond holders. And right now, in 2025, we are reaching like close to $1 trillion just for the interest alone. We're not talking about the actual debt, but just the debt interest alone. And we have to pay almost $1 trillion, so $952 billion. But whereas next year, we're going to pass that. We're going to reach that psychological number, so $1 trillion. So yeah, if there's so much debt that the US needs to pay out, that means kind of leave the Fed no choice but to cut rates, because basically the US government just doesn't have the money to pay its loan. So there's no choice for the Fed but to cut rates. So I would say QT ending and no rate cuts in December, it just simply does not make sense. It's just trying to create some contradiction in the market. And yeah, I mean, if I was his position, I do see why he would do that as well. So basically, Jerome Powell wanted to cool down the hype and stop too much leverage in the market. Although, like, he didn't name Donald Trump, but everyone knows the two kind of have some tension between Jerome Powell and Donald Trump, because Jerome Powell previously blamed Trump's tariffs for basically keeping inflation so high. Right now, the headline inflation, the CPI number is 3%, so it's still above the target of 2%, of course. And Donald Trump, of course, like has been criticizing Jerome Powell for months, or even during Biden's administration, so years, so calling him Jerome too late Powell, like he's not smart enough and he's not cutting rates soon enough or big enough, stuff like that. And Jerome Powell is kind of like blaming, okay, because of your tariffs, and my economy is still sitting at 3% when it comes to CPI report. So the politics actually is adding a lot of pressure, but the FOMC statement itself stayed focused on data. And Jerome Powell yesterday, he did mention, like he did talk about the job market as well. He mentioned the job market, like the hiring is slowing down. Unemployment rate is also ticking up. So if we look at the unemployment rate right now, it's sitting at 4.3%. And it has been taking up. Okay, June, we have 4.1%. If we zoom out to 3 years, 3 years has really been taking up. So from November 2022, right now, 4.3. So from 3.6% to 4.3% unemployment rate. So that is not a nice chart that Jerome Powell wants to see. But if you actually zoom out a little bit to a longer time frame, let's go to 5 years, you see the unemployment rate is actually not too bad. Okay, maybe we have early sign that unemployment is ticking up, and it has been ticking up for months or even for years. But like if we zoom out to look at the general economy as a whole, it's not like very bad at the moment for the time being. So for yesterday rate cut, we know he did a 25 basis point cut. Like his reasoning is that like the job labor market is showing some weakness signs, so he really has to step in to cut 25 basis point to protect the job market. And he's kind of complaining about the shutdown as well, because the shutdown delays the job data. It creates uncertainty. And also, we know the CPI report for September, it has been delayed as well. It has been delayed for like 2 weeks or something. So that's adding a lot of uncertainty in the market as well. And as for when it comes to the labor market, so let's go back to the unemployment rate chart. We covered yesterday on Roxham TV in our yesterday's show is that AI is adding a lot of pressure to the job market. And when I say a lot of pressure, I mean a lot of pressure because there are so much layoffs that just recently happened. Like, okay, for example, Amazon is laying off 14,000 people because of AI. And then UPS is laying off 48,000 of people because of AI. And there are a lot more companies entering this trend, firing people from different parts of the world. So it really is not exclusive to US. Basically, all companies, even in Hong Kong, like some of the banks are firing people because of AI. They fired like 30% of the workforce because AI increased productivity, but it also removes routine jobs, especially for younger workforce, like when they just graduated from uni, like of course the skills are not as honed, then might as well the companies will feel like, okay, might as well just use AI instead of having an intern or a junior inside a company, and it takes years for them to actually train up and be good at the job. So what I'm seeing right now is that it's kind of a trend that for junior workers being replaced by AI and human can, if they want to stay and work as the white collar worker, maybe they can only be like the supervisor. It's more like the final layer because we still need that human touch at the end, whereas all the repetitive work, the junior work is going to be replaced by AI. So Jerome Powell, of course, he didn't mention AI, but he's very cautious when it comes to the job loss, when it comes to the labor market. So short term, of course, like volatility, no doubt. Okay, we just saw 108K, actually dipped below 108K just 4 hours before we hopped on the live stream. But long term wise, I would say the Fed is still very flexible, and especially we know QT is going to come to an end. It's ending in December. Like we have confirmation. So I don't know why there's so much fun in the market, basically. And other good news I have for you today, like actually there are quite a lot of good news. Okay, so Donald Trump. So Donald Trump is meeting Xi Jinping in South Korea. Literally just happened today during the APEC summit, and these two, like they haven't met each other in 6 years. It came right after months of trade tension over tariffs and rare earth minerals and tech ban, so some AI chips ban. And Donald Trump called the meeting a 12 out of 10 and said the progress was made on key issues. And China agreed to ease its rare earth exports curbs and resume large soybean purchases, while the US lowers certain tariffs, like including fentanyl-related tariffs from 20% to 10%. So those are really good news. Donald Trump also invited Xi Jinping to visit the US in April 2026, but literally just hours before the summit, like he announced that he's gonna restart the U.S. nuclear testing for first time since 1992. So this is of course, it came as a surprise to the global market, and it kind of like killed some of the optimism as well. But I wouldn't say it's too bad. But basically, why this matter, and if you guys don't know the context, like the meeting followed weeks of intense threats. So Donald Trump had made something like ridiculous and tweeted something like 100% or even 155% tariff rates on all Chinese goods by 1st of November if there's no deal reached. And obviously, they make the deadline, they talk it through, they argue over the internet. So Donald Trump was tweeting so much. And then, of course, like China, they responded with some restricting rare earth exports. But like we know that they're going to make a deal because there's no way the US is charging at least 100% tariff rates on China. They need those rare earths. And basically, like, there's no winner when the two most powerful entities, like the two most important countries in the world, like on a fight. So this APEC summit kind of gives them a chance to talk, to work things out, to de-escalate, basically, and the two kiss hands and made up to each other. However, like, one thing we need to notice is that there isn't a official deal being signed, so nothing is written in paper. This is more of a truce and framework than a full agreement. The details and enforcement mechanisms will be decided later, and also because he threw out this like nuclear testing, like going to resume the nuclear weapons testing the same day, took many by surprise. The administration said the goal was to ensure arsenal reliability amid tests by other nations, but critics warned that this move risks reigniting a global arms race and could derail the goodwill from trade talks. It also puts China in a tough position, like balancing its diplomatic tone with its military stance. Well, anyways, like the market reacted quite positively. Like we have the Hang Seng Index, so it found 0.5% at the noon break, heading for its highest close since 9th of October. So Asia reacted the news very positively. So it's like Korea as well. So although the volatility still remained very high due to the nuclear headlines, is of course like a little bit scary. People describe this as just a temporary calm, like a pause in the trade war, not the end. So we still need a written deal that's very much in the need. Short-term wise, I would say like it's actually having a pause between these two countries fighting is really good for Bitcoin, and we have the rare earth stability supports back in the line from China again. But like the news about nuclear, it could really boost this safe haven asset, like safe haven demand. I would say, okay, safe haven demand for even USD. It doesn't have to be gold, but safe haven demand for USD, for gold, for silver, basically hard assets. It might create some pressure on BTC. So it really depends on the talk. Like if there's gonna be a written deal, like if talks fall apart or tariffs return, like that could delay the Fed rate cuts and hurt some crypto sentiment again. All right, so that's between Donald Trump and also Xi Jinping. Let's also hop on to some, like, another good news. So basically, I would say, is generally speaking, there are a lot of good news, but Bitcoin is just like overreacting a little bit. So right now we're sitting at 110. So yeah, on that important, like, critical support line again. Looks like we bounce back from that support line very nicely. But anyways, I was saying DBS and Goldman Sachs. So of course, like DBS from Singapore, and these two banks just made history. They completed the world's first over-the-counter interbank crypto options trade. That means two of the world's biggest bank trade a crypto derivative contract directly with each other. So no exchange in between. This is the first time something like this has ever happened between two major banks. And the trade, it happened it was done in Singapore because that's where DBS came from, using, of course, like under the country's clear crypto framework with the Monetary Authority of Singapore, and Goldman Sachs joined from the Global Trading Desk. This is a huge step in bridging TradFi and crypto, and this shows that banks are now like trusting crypto enough to trade directly. Like this is a big deal, but Bitcoin is not. Like it's kind of focusing on the bad news, the bad side of what Jerome Powell said. Like there's still some damage being done from Jerome Powell and also Donald Trump, some nuclear bond, basically. And on Twitter, like crypto is saying, traders are saying that TradFi finally embracing crypto. DBS said it already handled like over $1 billion in crypto options and structured products in just first half of 2025, and it has been up 60% year over year. So it makes sense why DBS really want to push crypto forward. So like this move with Goldman especially, it could really open the floodgates for more banks to join. This is part of the bigger trend. So we have the US spot Bitcoin ETF now managed over like $60 billion. And Asia, like this is coming from Singapore, but like Asia is really catching up fast. And a few days ago, we have the approval from Hong Kong of a Solana spot ETF. And this literally happened. And we even front run the US. So that's really something. And when it comes to the spot ETF, Hong Kong not only front run like the US, but like the rest of the world, because we had these first spot Ethereum ETF as well. And then, of course, like US follow. But Hong Kong is really advanced when it comes to this kind of stuff. So basically, let's come back to this deal, like how this trade works. Like, okay, this was a OTC crypto options deal, most likely on BTC. So options let investors bet on or hedge BTC's price without owning it. OTC means it's a private contract, so it's custom made, not traded on exchanges like CME instead. So DBS has actually been building toward this for years to come. Like it launches digital exchange back in 2020, and we know like Singaporean government has been pushing the crypto narrative and becoming the crypto hub for years basically, and they have been very bullish on crypto. And this, okay, what happened yesterday is the first bank-to-bank trade, showing that big institutions now trust each other to handle digital assets directly. And of course, this shows that Bitcoin is really maturing, like moving from just like some retail speculation and being mocked by everyone into a proper risk management tools, just like the Forex, just like commodities. So this is huge when it comes to the estimation of how much money could flow in. Like, of course, this is a OTC transaction. The trade amount wasn't public, but its impact could be in the billions, of course. DBS clients, first of all, they have been trading over $1 billion in crypto derivatives just like the first 6 months in 2026. So if Goldman could scale this, I mean, it doesn't have to be Goldman, maybe JP Morgan or HSBC, etc. We could really see at least $10 billion in new institutional flows by 2026. And global crypto derivatives already do like $6 trillion per quarter. And this could really grow 20 to 30% every single year. So again, this is significantly boosting liquidity into the Bitcoin market. Very depressingly, like I couldn't just walk into the bank or maybe in DBS in Hong Kong and walk in with some cash and purchase BTC from a proper bank. But I think, okay, this is purely institutional, like it's not for retail. Like regular people in Hong Kong or in Singapore, we can't just walk into a bank, a branch and then buy BTC. But over time, like these trades can lead to a more structured crypto project for wealthy client. I mean, that makes sense. Maybe like ETF style funds backed by crypto. And I will say a lot of people in Hong Kong would definitely be very interested. And when it comes to like Asia adoption, like Asia, I would say is really a region that we couldn't ignore when it comes to crypto adoption. Because like Asia is really picking up really fast. Okay, APAC is the fastest growing region. In the 12 months ending June 2025, APAC emerged as the fastest growing region for on-chain crypto activity, with a 69% year-over-year increase in value received. total crypto transaction volume in APAC grew from 1.4 trillion to 2.36 trillion, driven by robust engagement across major markets like India, Vietnam, and Pakistan. So I would say, like, even in China, like with the Chinese ban still very much in place, the demand in China is still actually growing. All right, and since I'm from Hong Kong, maybe I could talk a little bit more about Hong Kong as well. So here you go. So Hong Kong, when it comes to the 2025 Global Crypto Adoption Index, we're sitting at number 5. That's pretty nice, right? Like first one's Ukraine, and then yeah, I mean, I'm quite proud of what Hong Kong is doing for the general crypto scene. We have growing interest in crypto. We have licensed exchanges like Hashkey and OSL serve both retail and institutions. And we have the SEC in Hong Kong offering like clear rules, basically like clear guidance, because there are still a lot of countries in this world, like we don't know where the guideline is, and that is really stifling innovation and stifling like basically crypto projects don't know what to do because we don't have a proper rule, so we don't know what not to cross and what could be done basically. And then we also, of course, we have the Hong Kong First Solana ETF even offering staking rewards. So we are I would say, it's way more advanced compared to US. And Hong Kong is really trying to position itself as a crypto gateway for like between China and the West, because we are very multicultural. Like we're very westernized, and at the same time we are also Chinese. So I think that's really the beauty of Hong Kong. But what does this mean? Okay, let's come back to the DBS news. What does this mean for Bitcoin? So the deal between DBS and Goldman is proving that, okay, TradFi, they are really trusting crypto enough to trade directly and safely. And also Asia is, of course, like leading right now. Adoption is really growing in China. So I would say combine this with the Fed end of QT and rate cuts and this like bank level trust, that is like a recipe for a strong Bitcoin run in years to come. So yeah, I'm liking what I see. This is another great sign that crypto isn't a side market anymore. It's becoming part of the global financial system. All right, so that's a lot of good news. I don't know why Bitcoin is still not picking up, but I have confidence in Bitcoin. So let's visit that tomorrow in our tomorrow show. Okay, last call to action. So make sure to give us a follow on Twitter. My Twitter account, my Twitter profile is gemgemcrypto_io. Make sure to follow Roxham TV as well, because we have like every single day we have valuable content about the news, about what happened in geopolitics, about some key statements that people say, some important statement that people say. So basically, yeah, you're gonna get a lot of value and perspectives from following Roxham TV on Twitter. So again, thank you so much, guys, for watching. That's it for today's analysis. Coming to you from Roxham Hong Kong studio, of course. I'm live from Monday to Friday at 4 a.m. Eastern Time, breaking down the biggest stories in crypto, in markets, and in AI. So if you enjoy the show, make sure to hit the subscribe and catch the next one live. Wherever you are tuning in from, I hope you have a fantastic day, and I'll see you guys in tomorrow's show.